Good afternoon and welcome to the market recap. Today is still Thursday, June the 10th. Sitting in for Dan Hodgman, I'm John Hoagland. Thanks for trusting me with your time. I haven't done the recap in a while. It's great to be here with you, and I hope you had an interesting and profitable trading day. It didn't turn out to be the huge day that many people were suspecting because of the CPI numbers, but I think we're seeing some potential changes in these markets that might provide some bigger opportunities for us in coming days and weeks. As usual, I just kind of glaze over what happened in the markets today. We'll look at those on the charts briefly. And crude oil, we were talking this morning about the possibility that upside auction was showing signs of weakness. And boy, that got a brief hand when news broke out that the U.S. was possibly lifting sanctions on more than a dozen Iranian officials and energy firms. Prices tanked, but really recovered quickly. It was a very, very interesting and fascinating move, and it was a real face ripper if you were the wrong way. Hopefully, you were not, and if you tried to get into it, boy, that was a tough one to try and catch. Probably a lot of chasing going on in that move in crude oil. Hopefully, you didn't get caught up in it. The E-mini S&Ps, the S&Ps posted a new all-time high in the regular trading hours as rollover nears an end. And, if the fact that we weren't in rollover weren't true, I think the outcome of today may have been a little bit different. A lot of our longer time frame, bigger money participants working on getting their contracts rolled over into the September month may have kept the momentum a little bit outside of what we might normally see. The market really just kind of honed in on that previous all-time high. It's going to be interesting to see where this thing does settle. If it settles well, maybe there's going to be a hint of acceptance above that level for coming sessions. NASDAQ, the S&P's wrestled while the NASDAQ holds above support. Now, that support level in the NASDAQ was short of the all-time high. We did not make a new all-time high in the Dow or in the NASDAQ futures, nor in the Russell futures. The S&P is only ones to make that milestone today. Gold closes higher, still range bound, a little higher volume for us in gold. As what does and as goes gold, the euro pretty much the same thing, still range bound, a little bit higher volume. And the 10-year was an interesting trading day today. After the CPI number came out, there's a knee jerk in the upside in rates. So the 10-year initially started the day to the downside, but just ground higher all day long as rates dwindled. So tomorrow I will be trading the September contract in both the currencies and in the equities. Rollover was today. You could see that the volume is still a little bit greater in the June months. Tomorrow it's going to flip. There will be more volume in the September month. So all the charts I'll adjust for the forecast tomorrow morning, and we'll see what things look like. As far as other news is concerned, the jobless claims numbers really just got glazed over today. Nobody really talked about those. It was all about inflation, and the consumer prices jumped a little bit more than expected in all facets of the CPI. The Fed seems to believe that this is transitory and no need for an increase in the actions that they may have planned. FOMC meeting is Wednesday, so we're going to find out on Wednesday at 1 o'clock if this is true. We've got the first step towards easing would be if the Fed starts to publicly discuss it. and discuss the cutback on the 120 billion in Treasury and mortgage securities it buys each month. I know this is quantitative easing. It's meant to create liquidity and keep interest rates low. The first time that they're thinking about even talking about it would probably be at the Jackson Hole Economic Symposium in late August, and without any action or changes in quantitative easing until late in 2021 or even into next year. So nobody seems all that worried about inflation at the Fed here just yet. The other news that we kind of talked about already was the U.S. lifting some sanctions on Iranian officials, certain Iranian officials and energy firms. Apparently there's trying to soften some of the rhetoric so we can find some sort of an agreement moving forward, perhaps even with the Iran nuclear deal that's been speculated on, of course, today. You say hi to everyone. Prophet Eon, I haven't seen you in a while, I feel. It's good to see you again. Brian Murph, good evening. Greg, hey all. Greg, does the ES roll over undermine the usefulness of volume profile? It seems that volume would be split across expirations. I don't think that it necessarily undermines it, but it does. Rollover has always been a challenge for day traders, whether it was in the pit or on screen. The market acts a little bit differently. It doesn't go as far as it normally would, or it tends to go too far. Volume is, of course, split between the contracts. I don't see that that's really going to compromise the volume profiles, but it does compromise overall volume because you're going to see higher volume in the total number of contracts traded against all contracts. Where it really tends to blur is in the open interest, because you've got all this open interest moving from one contract to another. You have traders trying to leg their spreads so that they can beat the spread. It's a mess, and I think the most important thing to remember in rollover is the longer, stronger traders that have lots of contracts, I should say, lots of contracts to move into future months. That really becomes their focus, because if they can do it right, if they can do it cheap, they can save themselves a lot of money. I mean, if you have 10,000 e-minis to roll and you get your rollover done just on the bid, it saves you $125,000. So there's a lot of money in rollover, and a lot of money you can make and a lot you can lose also. All right. Bill Phillips, good to see you. James, good afternoon. Nicholas, afternoon. Owner 232, good to see you. It's been a while. How do you think the G7 may affect the market? I don't know. It's anybody's guess. We may have as much luck looking at the Magic 8 Ball as trying to speculate as to how that may affect the markets. I don't think it's going to necessarily have a direct effect unless somebody does or says something really stupid. And you never know. We are talking about politicians. So let's take a look at the charts and see what we see here. I'm going to get the daily and crude. This was a fun one. I always find myself sad that I missed out on a move like that today, but I'm also happy that I didn't get ripped on it. But I'm always using stops, so that should help with that. All right, let's take a look. Here's the daily and crude. Okay, we were discussing this morning how the auction process seems to be kind of slowing a little bit. Some of the volume is coming off. We lost 1,800 in open interest, and we are coming into rollover. So for the next week or so, the open interest numbers are going to be a little bit diluted, a little bit harder to read. We had the The market opened. We had that news come out about Iran, the big spike to the downside, and really a quick and very, I thought, healthy recovery, which makes me think maybe we're not as long in the tooth in this auction to the upside because that recovery was fast and strong. Fast and strong. Here we go. You're going to put the profile on it now. Thought I already did that, but that's all right. So we opened in range and in value, waiting for better trade locations. Certainly would have been the good idea today. Who would have suspected that that would have happened today? Headline risks are always something we have to kind of be aware of, and it's why we have to make sure and use stops. We don't know when things like this are going to happen. So the market opens in range, high of value, looks higher, looks at the high from yesterday, a little bit beyond that. Kind of comes back and starts to range, and then the news comes out and we get the big push to the downside and really a quick return to close higher on the day. To me, that says something. There's a rumor of a fundamental increase possibly in the crude oil marketplace, and the market doesn't ratchet lower and hold lower. It knee jerks. Probably got a whole bunch of people short in the hole here, and they scrambled their way to get right back into it. And it did end up actually closing a little bit higher on the session. So you have to see how the overnight looks and how things look in the morning to see what we can see where we can find some opportunity there. Here's the S&Ps. Boy, oh boy. Daily chart, just magnetized to that previous all-time high. What we're looking at this morning is switch day. CPI knee-jerked to the low of the 4-day balance. That's what we see right here. The market really kind of recovering that. Balanced rules means fade extremes. We're looking at this weekly kickoff high as kind of an extreme, and the last week's high as a bit of the extreme of the balance that we've been in. And generally speaking, the rule is if you accept outside of that rule, of that balance, you go with it. And initially, that was the move to make. We did not maintain price. Did we bring some volume up there? Let's put the profile on and take a look. It does look like we've spent some decent amount of time there. The market really magnetized towards that level. That does tend to happen. This was a previous all-time high. It's weekly kickoff high. It's an important level. The market kind of rotating both sides of it. This was the move to the upside. The opening range was the low of the session, starting at the high of last week's range, pushing higher, pushing above this level. There was a pretty distinct possibility that if we brought in new business to the upside, we were going to continue this move. Part of the reason I believe we did not see new participation up here is our longer, stronger money is looking to get a cheap rollover. Today is the biggest day of the roll. Most of the rollover is going to happen today and tomorrow. So I don't think were available to become directional today. So we end up largely range bound, magnetic towards important inflection level. You're going to see how this market, it basically closed right at the previous all-time high. These markets are so visual and fascinating. It's just always challenging. It's like golf. I can play 18 holes, and if I get 2 good swings, 2 good hits, that makes me happy. Well, you need a little bit better winning trade percentage here, but it's just fascinating how these markets work, and they're really just a reflection of people. It's the last price is the collective perception of value at that very moment, according to all available market participants. We moved higher, closing right at the previous all-time high. We put in a new all-time high in regular trading hours. what is going to happen next. You have to see how the overnight and what our opportunities look like tomorrow. The NASDAQ, here's the daily. NASDAQ held up a little bit better, but still no new high, no new all-time high. We've been 1, 2, 3. Today's the fourth day accepting above weekly kickoff high as well as last week's high. This market seems to be performing better than the S&Ps, but again, remember, the S&Ps put in a new all-time high. Is this market really performing better than the S&Ps? Here's the 30-minute chart. And opening, no gap, in range, right through value in the high of the range on the move up. Great pullback back down, almost back to settlement, and then just grinding back to the upside. What do these markets do when there's nothing else to do? They grind higher. They get short time frame traders short and grind it up on them. I'll be thinking that we may take a stab at our all-time high maybe tomorrow. That's a bold statement. Here's gold. Okay, gold, really not much movement at all this week. I mean, here's where we finished Monday. Here's Friday's close. Here's Monday's close. Where are we? We're at Monday's close, not too far from Friday's close. We've had some smaller ranges this morning. The knee jerk to this trend line, really probably one of the best opportunities that we saw today if we were sitting in the right seat. And this was one of our hypotheses. This would have been a hard trade to take because the market really ran down to that level and it just the sellers just evacuated the building like Elvis, and buyers came back in. So here's the 30. Well, I mean, where are we? We're still range bound. I'm calling this an upside market, but this, what I would say, is an upside digestion. We're spending some time here. We're evening out inventory. We're making it so that all of the longs that maybe were too long up here have had an opportunity to even out those positions, and they're now available to continue the move to the upside or break market stay to the downside. Here's that overnight inventory, way short. The market opens, knee jerks right to that trend line, right to I think this is last week's high, and grinds higher the rest of the day. Still grinding higher, it looks like. The euro, very similar. Upside digestion. Little bit of a market state here, but falling into balance versus a direct move in the opposite direction. 30-minute. Yes, Murph, Fridays are hard to gauge, 100%. So, here's the euro overnight shorts opening with those shorts removed, no gap, knee jerk down, another knee jerk down, closing, bringing it back up, really just kind of nothing after that, just staying basically inside of value, very narrow range for the rest of the session. In the 10-year, this was a fascinating one today. So the knee jerk was to the downside. We had our close above weekly kickoff yesterday. The knee jerk to the downside is we got that little pop in rates right at 7:30. And as soon as everybody decided that the inflation is transitory, rates went right back down and started heading the other direction, leading the 10-year higher. Once we got back above this weekly kickoff high level, there was our first close. Once we got back above this, became support, and we just ratcheted higher all day long, still ratcheting higher. So we've gotten through 4 days this week. Thank goodness. Tomorrow being Friday, we're going to see if we can make some money early and head out early maybe. Huh? Doesn't that sound like fun? If you've had a good week, make sure you keep your powder dry tomorrow. Going to be, as usual, another fun one. We kind of talked about all the news that I wanted to talk about already, so the meme stocks all took it on the chin today. GameStop, AMC, and Clover are down big. Congress, the genius politicians talking about making more changes to the U.S. retirement system. Of course they are, because I'm getting close. This day in history. They seem stuck. Oh, all right. Okay. Today, June 10th, 1752, Ben Franklin flew a kite in a thunderstorm. In essence, discovering electricity. You guys remember the book Where the Wild Things Are? In 1928, the author Maurice Sendak was born. It was like everybody's favorite book when we were kids. 1935, Alcoholics Anonymous was founded. 2007, on this day, the last episode of The Sopranos airs. In 1775, John Adams proposes a continental army. This day in music. I wonder what they're going to have to say about Led Zeppelin. 1910, Howlin' Wolf is born on this day. 1922, Judy Garland was born on this day. What a voice she had. 1966, on this day, the Monkees' first recording session took place. Hey, hey, we're the Monkees. Huh. 1978, John Travolta and Olivia Newton-John went number one today on the U.S. singles chart with You're the One That I Want. (2004), bless Ray Charles passes away at age 73. 2006, the surviving members of Led Zeppelin met at a secret rehearsal space in England to run through songs for the forthcoming O2 Arena benefit tribute to Atlanta Records co-founder, the late Ahmet Ertegun. It was the first time they'd been in the same room with instruments since their 1995 induction to the Rock and Roll Hall of Fame. More about Zeppelin. 2009, Jimmy Page was inducted into the Mojo Hall of Fame. Whatever that is. I don't know if I've ever heard of that. And that's about it for that. So as far as tomorrow, economic numbers, just the Michigan Consumer Sentiment number due out at 9 a.m. Central, and that's going to do it for the week, ladies and gentlemen. That's going to do it. Damon, what are your thoughts on the AMC short squeeze? My thoughts are, I wish I thought of it. You know, I think it's all fair. All's fair in love and war, and this is both. But I just, I worry that people that aren't aware of the risks in these types of volatile situations can get hurt. We don't want anybody to get hurt if they don't even know the game. PK, you're welcome. Nicholas, last week I hit profit targets in practice mode and was very proud of myself, having done so in less than 2 days with only 4 contracts. This week I'm doing awful in my combine. Any advice? Nicholas, the reason, my opinion, that it's easy to succeed in a simulated account and hard to succeed in with real money or even in a trading combine is the accountability. In a sim account, there's no rules, no accountabilities, no consequences. It becomes very easy to make some of the hard trading decisions that are much more difficult when you do have skin in the game. I liken it to I'm semi able bodied. If I were to put a 2x4 on the floor, I could probably walk across it without falling off with relative ease. There is no risk even if I do fall off. I'm gonna be falling an inch and a half. If I hurt myself, then oh well. That's like trading on a simulator. The process from going one end to the other on the floor, I could probably dance across it without falling off. Go into a trading combine. Now that same 2x4 is going to be 2.5 feet off the floor. It's the same process from going one end to the other, but now there's a little bit of risk. If I fall off and roll my ankle, I could sprain my ankle. There's risk. And then, moving into step 2 and then into a funded account and funding your own account, that 2x4 gets higher and higher and higher. So when we think about it, if we can put together a solid process with accountability, with risk, with consequences, and we can succeed in that, then then hopefully we'll be able to succeed in that for a long period of time, using that same process, moving from level to level, hopefully getting more and more successful, building your account, learning more about how markets work, more importantly, learning more about how Nicholas Sidaro works. Okay, so it's not just you, it's everybody. It's everybody. You really want to put together a process that works in sim and in step 1 and step 2 and and into the funded account and beyond. Now, it sounds simple, but it's not. Markets are always changing. 1 plus 1 never equals 2 in this environment. When you do get the right answers, the market's going to change the questions. There's a lot of paradoxes. These markets are, in one word, enigma. It's a puzzle you can't solve. All we can do is be good risk managers, find ways to find those asymmetric opportunities, smaller risk, bigger rewards, and be right half the time. That's all we need. Yes, there is a change in psychology and in the decision making process. That's exactly right, Nicholas. Okay, all right. I'm going to call it a day. Looking forward to seeing everybody tomorrow morning on the market forecast. Sorry about the problem I had in the forecast yesterday. Had a little bit of an internet issue. The internet company has obviously solved that. Looking forward to seeing what happens overnight, what the markets look like tomorrow morning. Tomorrow morning on the forecast, we'll always be looking for accurate context, good risk management, and patience. Get a good night's sleep tonight. We still got more work to do tomorrow. I'll see you in the morning for the forecast. Good night.